What's going on, guys? JPA Trades here, and in this video we're going to be going over the AMD trade from last week, challenge account, and going over some of the stuff we like going forward for this week. Before we get started, feel free to hit that subscribe button, join the channel if you want to become a member, but let's get into it. The AMD calls from last week. So, 2 weeks ago, 2 weeks ago, 10 days ago, whatever ago, on Friday, September 5th, the market was kind of nosediving. So we kind of took that as an opportunity to pick up some AMD calls. And you might say, like, why did you decide to buy AMD calls as opposed to anything else? And good question, I'll tell you. So I posted this chart on Twitter, and you might at first be looking like, looks like a lot of stuff going on. What are you doing here? So just to kind of elaborate, anytime there's like a major, like really long wick up or down somewhere, I kind of like to take note of it. So just to make it clear for you guys and for the chart, I highlighted all these major drawdowns. So I think these were all like $10 drops that I highlighted. So anytime a $10 drop happened in the next day, it was always from the very bottom to the very top. It was almost 7 out of 6 times. It was $7.50 higher the next day. For the one time I bought, of course, it took a few days to get there, but when it got there, it really got there because we went from like the low of the 149.3 all the way to the high of 165. But kind of getting back to why did we buy the first time? So when everything was selling off, and this is a daily, so let me just go to like a 90-minute just so we can show you a little bit clearer. So just going back to the 5th, like we had that big dump off, and you're like, oh, why did you buy where you bought? And it's like, oh, well, I just happened to buy 150 because like solid numbers like 160, 170, 150, 140 are all going to have some support to them because you'll just have people sitting with limit orders on whole numbers. But also there was that previous buy, like a previous big wick down at 149.34, and I also saw like another spike up, and this looks clear on the daily at 148. So I knew that there was a pretty tight range where it had a good chance to bounce. So we ended up buying them like kind of in the morning. So it kind of chopped around a little bit, went a little higher, went a little bit lower. Then in the afternoon of the 5th, so kind of getting ahead of myself here. So just stick to the 5th, where we want to be at. So we kind of saw that wick down, kind of stuck around, bounced up real quick, and actually we took some profit on that first bounce. And I keep a log here and like a thread for you guys so you can see like, hey, here's all the transactions that I did in this account. I just kind of make it a little bit clearer. I know I sometimes ramble a little bit in these, but so we had that first bounce and we took profit on 7 contracts, and we didn't really see the follow through on Friday like we were looking for. Like we had a bounce back up. Here's kind of where we took our trim. Then it kind of faded back down into the close. So if you see here, I actually ended up like closing 8 of these contracts for break even. I think it might have actually been like down 2%. So I know at the end everyone saw like, oh man, AMD, that was a great trade. But like, why did I like not hold it all the whole way through? Why did I decide to sell some of it? And I guess just for example here, so when you're growing a small account, like there's always like you have to be a little bit riskier in the beginning until you're like, all right, here's where I need to take my foot off the gas. And for me, for this account, I just said, hey, $10,000 is where I'll just call it a win because when I was first starting out, that kind of felt like once I had like 10 grand, it felt like, hey, I can buy $1,000 worth of something. I don't want it to go to zero or down a ton, but I could at least kind of stomach it and survive for the next one pretty easily. So for this account, I basically do about 50% exposure. So I started out with 22 contracts of AMD. But you notice, like, as soon as I got that first bounce, I was like, all right, I got to get out of some of these, reduce my exposure, capture some gain, and kind of hold steady. And then when it says, like, hey, I went from 50% green back to 50% zero, and then even a little bit red, it's like, all right, I'm going to take some off. But I still like to trade because I always say, like, hey, risk what you can afford to lose for everything. So realistically, this account, I don't want to risk 50% of my portfolio for like, hey, this is just plain exposure. Like I didn't capture anything. I'm gonna keep half of it out there. and the trade kind of started moving but didn't really move. So it's like, hey, let's reduce this, make it reasonable. So we kept the 7 contracts, and we're going to go through kind of what happened each day. Because on Monday, we actually went down lower. So we went from the 3,600 back down to 3,400. And had I kept the full portfolio, I'd been down 42% on the 1,700 and kind of hating my life. But luckily that didn't happen because we took some profit. Like, yeah, hey, we kind of did a hard reset, like the AMD trade never happened. But if we kind of go back to the chart, we never gave up the 150, 149 range. We'll go back to the daily here. So, like I posted like the pucker zone because it's scary and just to be funny. But the zone I was looking for was like this 148 to 149.3 zone. And that's like, hey, if it got down to 147.75 again, I'd have maybe averaged down or did a little bit of maneuvering to buy back and get us there for it. But it never made it down into the zone. It was always right above it, like 150, which was great because it kept our calls alive the whole time. And kind of like I mentioned, every time there was a major wick down, it was always $7 higher plus, and one of them was like $16 higher here in the following day. Like it didn't might not have lasted the whole day every time. Like you saw this big spike down, spike up, then dip back down, but there was always a follow through, which we were lucky, and maybe lucky, unlucky is the opportune words. But Oracle earnings, like I'm not going to say, hey, I saw Oracle earnings coming, but the pattern that AMD gave us is like, hey, the opportunity is here for a bounce. I'm going to see it through because I never lost the 150, which is why we kind of never gave up the position here. So just going to the next day's log, like it recovered a bit. We were like 100% days gain, so I've done better buying more, which would have been great. But hey, I just held my position. The trade stayed the same. It was always, hey, above 150. I like what I see, and I want to see how we play out here. So didn't sell any, held the whole 7 because the move that I was targeting never happened. So I'm not going to freak out because I'm up 30%. I already sold it once for 50% on a one trim and 0 on the other trim. So nothing changed, just had to keep the same, keep what we were doing. And then waited till Oracle earnings hit. And if you guys remember, and I might just need to look up the timestamp, but the second that Oracle's earnings hit, I took profit. So in the morning of those big crazy gap ups, which right here, so September 10th, huge rip up. Yeah, literally 9:31 in the morning. I posted to you guys. I was probably already out. Like I have the picture at 9:30. Like I had the order in. My order was only for 4.5. It actually got executed at 4.75, and the high of day was I think it was 5.5, if I'm not mistaken. So those big gap ups happen. You just take them. So I got out of 5 right away, like on the gap up, huge because look, we literally went from 3,800 to over 6 grand right off the pop, and we were peaking at like 6,200, but it kind of stalled out, like which was expected. Like, hey, it's not a guarantee that this thing's just gonna blast up to like 170, but like the potential is there. Like you can kind of see like, hey, there's maybe a little wedge going down, but not gonna say anything crazy or not crazy. But I was like, hey, we saw this big run up. There's the potential for hey the momentum to keep going the rest of the week. We already got bigger profits than we thought we were going to. So let's hold and see what happens. And it kind of stalled out, so we took one more at $350, so up another 350%. But we held one just in case. But unfortunately for that last one, it stalled out, and sometimes you gotta let them go to the grave, which you'll have that. But still, huge week on it. So $2,200 up on the week when we started at $3,400 when we started the position. So from 50% risk of the position, we got like 60 over that. So 50% of the account, 1,700. So like 65% of the account to increase. So awesome stuff. And then, like I said, next position side is going to be about 2,900 because we have $5,800. Going to be the same process. Going to look for a spot to buy. Once I get that initial bounce reaction, going to take off like a third or so. reduce the size so that I can hold through and want to see the play come out. I can just, hey, I'm not worried about losing money. I'm worried about watching the trade work because I took my profits right away. I can let the rest kind of fully develop. And that kind of segues into what we're going to talk about next, which I posted a little chart on Twitter, but we'll talk about it here. So I almost bought Amazon calls on Friday, but as you just saw with the AMD trade, I bought on Friday. I saw a little bounce, and I got screwed on Monday morning. So is it going to happen again where I see like the 227 again Monday morning, get a chance to buy calls and work my way up? That'd be pretty nice. So Amazon on the radar, and just to kind of build on that, like Amazon's going to always be on the radar for a little bit, guys, because if we do get this 242.5 breakout, it's basically, in my opinion, going to do the same thing as Google, where here was like the previous all-time highs, that 207.5, and as soon as that gets broken, you just get everyone piling in. So happened on this day. Just say you bought the top, you get 16%. But remember, I told you guys to buy GGLL, which is 2x leverage. So like you still kind of get that options juice with shares, and it's a lot less risk. So you get 30% in 2 weeks on shares. You can risk a lot more capital because hey, it's shares. So that's why I mentioned with Amazon, AMZU. So same, it's going to be like actually back here is AMZU's all-time high. I think it's February 4th is Amazon's, right? Uh, yeah, February 4th. So this might be like there's decay in leveraged ETFs. So you do have to kind of time your shots with these. Like I wouldn't necessarily recommend holding them forever, but when you're like, hey, here's an all-time breakout possibility, like keep that in mind. But let's just pretend uh, well, Amazon's going to be easier. We can do it here. I don't necessarily know if it's going to go to 50 beforehand, but basically somewhere around, it's going to be near 50. You're going to want to add shares, but that's why I say just watch Amazon and then just switch over. It's like 242 breaks on Amazon. Set an alert on whatever your broker is. Just jump over to AMZU. Just buy however many shares you want, and then you're just going to hold on for 2-3 weeks. Hopefully, see that reaction. So if you get 16% in Amazon, you'll get roughly 30% in AMZU, and hopefully make a little bit of money. So this is kind of like a long-term, short-term. Like there's just a really good setup and opportunity in Amazon right now that just it looks really nice and it looks really clean. So just kind of keep this on your radar, guys and gals. And I think that's all I got. So hopefully we have a good week this week, and have a good one, everyone.